Hello everyone. Today we are going to discuss about a company called Raymond Limited. When we all think about Raymond, the first thing that comes to our mind is suitings, fabrics, the complete man, if you will. But the Raymond Limited in today's avatar is anything but suitings and fabrics. It is a precision engineering company. It has got more of a lineage and pedigree of another group called Maini Group. People in the earlier generation would have seen India's first electric car called the Reva. It was launched in the 90s by the Maini Group. It got acquired by Mahindra and Mahindra. This particular automobile was conceived by Chetan Maini much before Tesla became mainstream, or even Elon Musk would have contemplated about the electric EV called Tesla. This particular automobile became the part of the DNA of Mahindra EVs. So in the present avatar, Raymond has got two subsidiary companies under it. One being an auto components company, and the other being aerospace. Other one is an aerospace and defense company. If we look at the lay of the land in the aerospace division, there are about 17,000 aircraft orders which are today pending with the two companies which manufacture commercial aircrafts, Boeing and Airbus. The aircraft industry is split between OEMs. Then there are tier 1, tier 2, tier 3 and tier 4 suppliers. So that is basically the value chain of the aircraft industry. And if you look at it, the median age of an aircraft industry worker, which may be they can be part of the OEM, they can be part of the tier 1 or tier 2. These employees are aging fast. Their median age is 50 plus. 70 to 75% of the entire aircraft workforce is presently located in the United States and in Europe. And there are labor unrest and stuff like that. So we are seeing a lot of tier 1 suppliers, tier 2 suppliers getting folded, or they are being given government support to survive. So against this backdrop, India is now emerging as a credible aerospace manufacturing hub. The reasons are manifold. One is basically a China plus one strategy. China is developing their own aircraft through COMAC, and there are issues of IP integrity and stuff like that. So the major aircraft OEMs and tier 1s are forced to look at alternate markets. India has got a very strong auto ancillary ecosystem, and there are adjacencies in capabilities like machining, forging and the likes. So that makes us a good contender for being a good aerospace supplier. If you look at it, Boeing's sourcing from India has grown by about 5x in the last 5 years. Similarly, GE Aerospace is reporting about 20x growth in their sourcing. So all in all, there are a lot of tailwinds which support India as a aerospace manufacturing hub. Now, the main players which are there in the aerospace manufacturing business in India, being tier 3, tier 4 suppliers, are other than Raymond, are Sensera Engineering, PTC Industries, Aquas, Dynamatic. Then you have companies like Asad Engineering, Unimac Aerospace and the likes. Now, if you look at aerospace business, the entry barriers are actually very high. It takes almost 5 years to enter into a OEM's supply chain. So it is not easy for somebody to just put up capacity and start into the aerospace business. Now, if you look at Raymond's aerospace business, they have a long-term agreement for manufacturing parts which goes into the LEAP engine. Now, LEAP is a joint venture company between, the company is called CFM International. It's a joint venture company between Safran and GE Aerospace. So they supply parts which goes into LEAP 1A, which is the Airbus engine, LEAP engine. They also supply parts for LEAP 1B and LEAP 1C, which is Boeing and Comac. So they have already got into that supply chain. They also have recently signed agreements with Pratt and Whitney, another major player in the aero engine business. So if you look at their aerospace business, almost 75% of their aerospace revenues comes from parts which are supplied to the engine of an aircraft, which is much higher value and much higher complexity. They also have a auto components division, which actually supplies to EVs, hybrid vehicles and ICE vehicles. They supply gears, flex plates and other precision products. Now, if you look at their overall financial snapshot, back of the envelope, you can see that last year they clocked about 2400 crores of revenue with about 400 crores of EBITDA and about 17% EBITDA margins, right? Now, in their recently concluded investor presentation and calls, they have guided about 25% growth for their aerospace business for the next 3-4 years. Another tailwind that they have is they are putting up a massive capex of about 1000 crores in Andhra Pradesh. Out of that, 500 crores goes into the aerospace vertical and another 450 odd crores goes into the auto components vertical. Their balance sheet is very strong, which is net cash positive. They have got about 1000 crores of cash in their books. If you look at a relative valuation, at today's prices, Raymond is valued at about 3,400 crores of market capitalization. If you look at the relative valuation between the different companies which we discussed in the value chain, we can see that Raymond is valued at an EV by EBITDA level of about 12. It is valued at 12 EV by EBITDA. Whereas the competitors like, for example, Asad is valued at about 75 plus, PTC is valued at 250 plus, Unimec is valued at even at about above 50 plus. So the broad investment thesis is this: once the market recognizes the relative undervaluation, once the market knows that Raymond is a pure play engineering company with a lot of capabilities in the aerospace business, we believe that this company has got a long runway in front of them. Thank you.